This is why going into next year, I'm a bit more concerned about a pickup in volatility, potentially lower returns, because you just have a very extended and overbought market. Everybody's in the pool. If somebody gets out of the pool, you're going to potentially get a stampede of people getting out of the pool. All they got to do is get out and yell shark, and everybody comes out, right? We have so much leverage in the markets that at some point, if something triggers a sell off, you're going to get a decent correction. And a pullback to the 4 year moving average is not uncommon. For the last 15 years, we've tested that 4 year moving average numerous times. So a retest, if you were going to do it today, said Lance, where's the 4 year moving average? That's at 49.90 right now.
Welcome to Thoughtful Money. I'm Thoughtful Money founder and your host, Adam Taggart, welcoming you back for a special Thanksgiving week edition of our weekly market recap. I'm joined as usual by the, what do we want to call this? The delicatessenary portfolio manager, Lance Roberts. Lance, how you doing?
I'm good. I'm stuffed more than the turkey this year. So yeah.
Well, I picked that word delicatessenary because, as I understand it, you actually don't do turkey on
No.
Thanksgiving. You're a Texan. You do all sorts of meats, briskets, sides of beef. How was it all?
It was great. It's interesting. I'm just, there's probably 20, 25 people kind of that all get together for Thanksgiving. And probably I think my wife is the only one that actually eats any turkey. So we just order a little turkey breast for her and have it shipped to the house. And then, yeah, everybody else is eating we're Texans. So, it's brisket and sausage and barbecued chickens and, mashed potatoes and all kinds of stuff. Yeah. It's
Wow.
anything but a traditional Thanksgiving.
It all sounds good, but I'm guessing, yeah, your family's probably full up on turkey because they live with a turkey for the full year
For
round,
the
right?
most part of the year, yeah, they're pretty much fed up by the time we get there.
We had fun. So obviously, folks, I'm not in my studio. I'm on the road. We're actually back in California. Had Thanksgiving with both our kids, which was great, but also with my whole wife's extended family and also some good friends of theirs. The friends own a vineyard up in Alexander Valley, up in Healdsburg. If anybody who's watching knows where that is, but it's up here in Sonoma County. Very, very beautiful, very, very rustic, in a very charming way. But it was funny because it turned into Thanksgiving everyone's going to remember because the kind of the dad who's hosting. His one job was to go pick up the turkeys, and he got there too late.
No.
So, with like, an hour and a half to go before everybody was arriving, there was a mad scramble to come up with a turkey replacement.
Oh no.
Uh, yeah, she sent him out. He found a place where he could get these cooked chickens. So we had a lot of chicken for Thanksgiving. And he ran, she told him to get 10 half chickens, and he ended up getting, unbeknownst to him, full chickens. Plus, he got an additional four more just to be safe. So we had 14 chicken, whole chickens. So it was like a party
Well,
favor. Everybody had a chicken to
you
take home
can
with them.
never have too much left. The best thing about Thanksgiving is the leftovers.
Right,
So,
right. So everyone here will be having leftovers forever. But it was a great time. I hope everybody watching had a wonderful Thanksgiving with you and your families. If you're watching internationally, I still hope you had a good time with family this week. And obviously, us Americans are sending you all of our good Thanksgiving wishes. All
that's
right,
right.
Lance. Well, look, as we said last week, we would meet today
Mhm.
just to give folks an update, an abbreviated week. I will commit to you that I will get you out of here in hopefully about half the time we normally do these, so you can get back to
Perfect.
your family. But we did want to give folks watching, we did want to give you, an update this week.
Yep.
So why don't we start, Lance, and maybe we'll get to the TA pretty quickly here to look at the
Sure.
charts. But uh, uh, the big question hanging in the air last week was, hey, did we just see the AI bubble peak out? Right,
Right.
because Nvidia had released its phenomenal earnings and expectations, and yet the stock kind of rolled over.
Mhm.
And you had said, I don't think so, folks. Don't assume the worst here. This is probably just a pullback, and we'll probably set us up for going into an end of year rally.
Mhm.
That is, I mean, it's lower volume this week, so
Right.
TBD once the traders come back next week. But the world didn't end. And we've seen some strength in the markets this week. And so I want to give you a chance to give us an update on where we are in the technicals there, but I also want to pick up our thread. We were talking a bit about Google last week, and what's seeming increasingly what's going on here is maybe we're seeing the lead sled dog position in the AI space shift here. Maybe we maybe
Yep.
see Google stepping up to actually be the kingpin that pulls the sled going forward from here. Curious to hear your thoughts on that.
Well, that's why we own Google and Nvidia, right? So, look, it's going to be an interesting thing that comes out at the end of the day. So, one of the big shifts last week, and a lot of the conversation was around these TPUs that Google is developing, and they actually started developing these chips 10 years ago. It was back in 2015.
And sorry to interrupt, but in your answer, if you know it, can you differentiate kind of a TPU versus a GPU in terms of how it actually performs? Because I believe Google's chips are better for certain functions and NVIDIA's chips are better for certain other functions.
Yeah, yeah. So yeah, it's a really easy, kind of explanation. So TPUs are very, very job specific, and they are built for a single purpose application. And in a normal GPU, what happens is that data is transmitted in one direction and written, and then it's sent back and then be processed and then pulled forward again. So there's a delay in the processing of the data that occurs inside. Now, this is all happening in nanoseconds, right? I mean, you can't imagine how fast this is occurring, but there's a transmission back and forth. Well, in the TPU, the data is basically sent in one direction only. So just think like a straight pipe, and the data is just funneling through in one direction. So it's much faster, but it's very application specific. Where like NVIDIA's GPUs have multiple functions. You can use GPUs for a lot of different things, whether it's video graphics processing, data processing, whatever it is, they have a lot more flexibility. So again, if I'm building a data center in theory, and I don't know exactly who all is going to be storing data in my data center, I'm probably going to use GPUs because it gives me more flexibility. For Google, they're specifically building these TPUs for the data processing for AI because it's a singular purpose application. And so this is important, but it's all because again the kind of initial thing is like all of a sudden there's competition for Nvidia in terms of data center build outs, and that's a true statement. If I'm going to build a data center and I have a very specific use for that data center, I may choose TPUs over GPUs for that. They're more cost efficient, they're more efficient in their operation, they're more power efficient because of how they operate. So there's a lot of reasoning to use TPUs. Does it unseat NVIDIA as the leader in the space? Probably not, because NVIDIA's world of GPUs have much broader applications. But that's why we own both. And that's why we own Google and NVIDIA. And one of the things, Adam, that is all that we have to be aware of is that at the end of the day, do you ever see that series called Highlander back in the day?
There can be only one.
There can be only one. And look, I honestly think at the end of the day, there's only going to be one AI, whether it's Chat GPT or whether it's Gemini or whether
Kind of
whoever
a
it
winner
is.
take all. Yeah, we've
Yeah,
talked about
this
this.
is a winner take all game. I think I could be wrong. Maybe there can be multiples, maybe two or
Yeah. Right.
three, but I kind of think that eventually people are going to gravitate to whoever wins this race, whoever develops the application. I think a bulk of the world will move in that direction. So again, as an investor, I kind of want to have a few fishing lines out in the water
Right.
because I'm not smart enough to know who's going to win this race.
Well, so this is okay. So a couple things. So thank you for that explanation. So it's sort of GPU is the generalist, TPU is the specialist,
Right.
right?
That's a
And
much better way to say it. I could have done that and been done with it.
no worries, no worries. Um, do you know with TPUs, like you said, oh, if you're going to do just AI,
Mhm.
TPUs might do it, but is there an AI TPU or is TPU, specific functions within AI? Like, okay, for an AI agent that does X, we've got this TPU, right? Is it sort of task specific like that?
Yes. So you're starting to step a little bit beyond my knowledge base, and
Uh,
I'm probably sure you've got some viewers that are much more familiar or have a deeper understanding of this than
if you
I
do,
do.
folks, just chime in the comments here. Yeah,
Yeah.
we're all learning
So,
together.
but yes, my general understanding is these are very application specific type processing. So again, I could build a TPU in theory, that I could build a TPU for different functions, but it's very application specific.
Okay. So a couple of things. So first, competition. So I mean, let's, I think for a couple of years now, we've been sort of predicting that, hey, at some point, companies are going to look at all the gobs of revenues and profits that NVIDIA is making, and they're going to get into this space, right?
Mhm.
And so that's starting to happen now. So this is one thing to note, which is, hey, competition is now getting to a material level for NVIDIA. And when you have competition, I mean, it's great for innovation. It's not necessarily great for profits, right? Because competitors basically start competing away each other's profits, right, as they try to be price competitive in the market. So this could be an interesting new era in AI where, maybe future profit margins need to be marked down because there's more entrants in this space.
Mhm.
So we'll see. Now, I'm kind of talking out of my league here, but I share your thoughts about kind of the Highlander analogy, Lance, which
Right.
is, we saw this happen in the internet where you had big generalists like Yahoo. I worked for Yahoo for a number of years, and Yahoo lost its leadership in an increasing number of verticals as vertical specialists emerged to really
Mhm.
capture that space. So Amazon and e-commerce, Facebook and social media, YouTube and video. I mean, just the list is endless. Um, uh, the reason why those vertical leaders kind of walked away with the pie was because of network externalities, where somebody said, "Hey, look, this guy's beginning to develop the best solution in the space. So out of all the choices, I want to use that one, obviously." And then the more people that chose that, it became more valuable because that's where the audience was, and it created this virtuous cycle. I can definitely see the same thing happening with AI, which is who wants the less smart AI? You just want the best answer to your question, right? So as a public perception begins to emerge that, you know what, it's Claude or it's ChatGPT or it's Gemini or it's X or XAI, or Grok, I guess is what they call it. That's where the audience is going to go, and then where the audience and the revenues go, they'll just roll that into more R&D and making the product even better, and it kind of begins to spiral away from the rest of the competitors. So it's the competition landscape is going to be interesting because it might be more competition for a while and then less competition as you get one leader emerging at the end.
Yeah. Well, and you just think of it, it's kind of easy to understand what you're saying, which is correct. Just look at internet search browsers. I mean, yeah, there's Microsoft Edge. Yeah, there's, Opera, there's Firefox, there's a bunch of different browsers. But when it comes down to the end of the day, the vast majority of usership is Chrome.
Right. I mean,
And
Safari is somewhat big, but probably
yeah, no,
search engines is probably a better analogy because
yeah,
you've got.
yeah. Our search engines. Yeah. I mean, I'm just saying is that, it doesn't mean that there's not going to be other AIs. And I don't want to imply that not that all the other AIs are just going to go away, but there's going to be one dominant victor out of this that will have a vast majority of the market share.
Yeah, yeah.
And for
Okay.
your reasons, I think a part of that's going to come to whoever figures out, whichever artificial intelligence figures out. And this is one thing, we talked a little bit about Google and Yahoo last week, how Google went to Yahoo and said, "Hey, why don't you buy our search engine?" And Yahoo was like, "No, we don't need you."
But trust
And
me,
what
as a former shareholder of Yahoo, I rue that decision on a daily basis.
so yeah, so Google figures out AdWords and changes the whole marketing game. And that's one of the things that I think will separate out who wins the AI space is who figures out whatever processes there is. It's kind of like the AdWords for artificial intelligence
Mhm.
provides the tools, the backdrop, and the structure to allow companies to monetize AI. And I think whoever figures that out is probably going to win the race.
Mhm. Well, look, I've got a couple ideas that you're sparking here, but I'm so much not an expert in the space. I'm just going to
You
keep
and me
them to
both.
myself for the time being. Yeah. All right. Well, look, if we can, let's go to your true area of excellence, which is
Yep.
what's going on in the markets. Let's look at the markets in general, but also maybe let's just take a quick look at NVIDIA and Google stocks as well. because I haven't looked at them since last week, but my sense here, Lance, is at least at this moment in time, it seems like Nvidia is still kind of recapturing its legs beneath it, where Google just seems to be freaking off to the races.
Well, yeah, again, so here's Nvidia. This thing, and again, it's always important to keep things in a bit of perspective. And every time there's a bit of a correction, we touched on this last week. And every time that a stock corrects, we've got to have we need to, as investors, we always have to come up with a rationalization. Why is the dollar going down? Oh, we're debasing the currency. Well, you forget it had a huge rally before the decline. So, things get overbought and then you're going to get a reversal.
Right.
We had this huge rally in Nvidia that started back in April of this year. So, we're having a bit of correction. That should not be surprising. But again, as investors, we always need a reason. Oh, why is it going down? Well, it's because, the AI or this or that or the other thing. In reality, you were three standard deviations above long-term means and very overbought, and now you're getting a decent pullback. You're not yet, and I wouldn't necessarily. We bought some stocks this past week, but we didn't buy Nvidia yet. But we're probably going to add to Nvidia here soon. We're waiting for kind of some signals to trigger. But you're now getting decently oversold. So the opportunity, where investors go wrong is that they're always buying stocks when they're very overbought. It's
Right.
like, oh, I got to get in. It's going up. It's going up. I got to get in. Um, you know, it's always better to kind of wait for a pullback, get a better entry point, and those type of things. So, the dynamic, looking at the earnings, the fundamentals, the whole story behind Nvidia, there's nothing wrong with the company. This is just simply a price correction of overbought conditions, and we're likely going to see this stock base here a bit and then turn up, and you'll have a much better, kind of entry point to add shares to your portfolio. But to your point, Google has just went off to the races, and we actually took profit.
After having the same rocket ride since May that Nvidia had.
Yeah, exactly. But a lot of this was around, what was going on with kind of the Gemini and their AI space, and this kind of performance issues. But this stock was extremely overbought. Now, and we actually took Google. Google was our largest position in our portfolio, and we trimmed it back this past week to target weight because when you look at this on a weekly basis, you have had this parabolic move higher here. You're more than three standard deviations above long-term weekly moving averages. And previously, when you have these type of kind of very overbought conditions, you get decent corrections in the stock. So again, I still want to own it, but you've been on a relative strength basis, a momentum basis. You're extremely overbought here. You're going to get some type of corrective action in Google at some point here. Probably pull the stock back into the mid 200s. Wouldn't be a surprise. Maybe even a little bit lower. And then you'll have another good opportunity to buy it. But and that's why we took profits out of that position this past week was because primarily of this technical overbought condition. We still love the stock long term. We think that they're going to be a dominant player long term, but you're going to have corrections in these positions from time to time.
Yeah. Okay. So a couple questions here. First, you said Google was your largest position
Yeah,
before you started trimming it. But I'm guessing it became your largest position because of this price action, not because you
correct.
guys were deliberately trying to overweight it.
Well, no, yeah, we will overweight and underweight stocks because of tactical positioning reasons. And so we'll adjust the weights in the portfolio. But, as we've talked about before, when we position a stock within a portfolio, we have a base target rate. So every position in the portfolio can have a maximum of a 5% weight, can have a minimum of 1%. So it has a range that it can work in.
Hmm.
So we'll identify a target weight for that stock. So let's say that a good example was Meta. We started adding Meta to the portfolio here during this whole kind of week period over the last month or two. So that target weight for Meta in the portfolio is 4.5%. That's our target weight. We started at 1 and we've been building into it. So now this week we added to it again on this pullback, and we're now up to target weight on that. Now, so if Meta grows to be 4.5, it's a 5.5, or 6, then we'll trim it back to 4.5.
Hmm.
That's what happened with Google. Google was a 4% weight and went to almost 6, and we've trimmed it back to target. So, again, we're still long the position. We just took profits out of it, put that money into other positions that maybe are in a little bit better position technically right now. But it's just managed, and it does, and that serves two purposes. One, it manages the risk in the portfolio, but two, it's a forced process to take profits so
Right.
that when downturns occur, we just don't wind up giving up all of our gains.
Right, right. Yeah, it's like to your gardening analogy, it's when the
Yeah,
tomato plant gives you a surfeit of tomatoes, well, you take at least some of them right away.
correct.
Right.
Otherwise, they just rot on the vine, right? So,
Exactly. Yeah. Okay, so here's sort of where I'm going narrative wise.
mhm.
So, like I said, last week there was a lot of consternation that, like, oh my gosh, maybe the AI trade is topping out here, right? It doesn't seem to be, and we're going to get the S&P in just a second. But what I am sort of detecting, and I'm curious if you're hearing the same thing, is look, you said earlier, there's nothing wrong with Nvidia, no worries. And there are people that might disagree with you on that
Sure,
because of the
that's what
stories
makes the
that
market.
the market, but also just like the news cycles that we've had, right,
Yeah.
around the circular financing and the sketchy, some people are saying are sketchy accounting things and practices and stuff like that, right?
Mhm.
So one of the things I think I'm detecting is, hey, doesn't matter if the bloom is starting to come off the Nvidia rose because the we've got this rising superstar now in the space again in Google, and so therefore the AI trade is fine because we might have our lead sled dog might slow a little bit, but then the guy behind him is picking it up and is going to start driving us
Right.
forward from that. So I just want to see, are you sort of detecting that same sort of narrative in the market right now?
Not really. Because again, we're still just looking at this from a technical flows basis as well.
Mhm.
And, again, we're correcting really overbought conditions. We had this massive run. So again, this bit of a pullback. Look, nobody likes pullbacks in the markets, right? If everybody would be happy if just markets went up every day and we never had a pullback or a
Right.
correction, right? So
Absolutely.
but every time there's a correction, we have to know why, and we have to rationalize why that's occurring. And so we come up with a lot of these stories that occur. And if there's any piece of news, remember we've had DeepSeek, we've had the AI trade was dead back in July of 2024. Every time we have these pullbacks from overbought conditions, we got to have a narrative for it. But if you take a look at earnings growth, the trend of growth, the profitabilities of these things, those are still growing exponentially. We're not seeing any real material slowdown in margins or anything else. Now, eventually that's going to occur. It's just a function of time. The margin that NVIDIA can generate on chips is going to shrink. There will be other competitors that come to market. There will be a shift in the market tenor in one direction or the other, and they're going to have to reduce margins in order to continue demand. That's just a function of how markets are going to work. But that's probably another year or so out before we start seeing any material impact at this point. Um, but yeah, this we also have to remember, we also still have very much the passive indexing effects. NVIDIA is 8% of the index. So every time somebody says, "Oh, look, I'm going to buy the AI trade," or the index is going up, I'm going to buy the index. $8 of every 100 are going into NVIDIA. So that's also another problem that we have with the markets that continues to defeat these bullish narratives, and everybody keeps forgetting, everybody keeps coming up with this, market's overbought, they're overvalued, they're this, that, and the other thing. But everybody's dismissing this power of this passive indexing cycle that we're in that just continues to deflate the markets. And we saw this last week. Is last week, lots of pressure on the markets. On Monday, retail buyers showed up in force and started buying the markets again.
Right. And I think the reason for that, though, is it's like because it's just so constant. It's like the sun. The
Yeah.
newspapers report that the sun rose this morning because we
Yeah.
all take it for granted, right? It's the same
Yeah.
thing, the passive bit there. Okay, so that's fine. And again, like all I'm trying to say is I think Google's strength has prevented people maybe from freaking out more than they might
Yeah.
have about the weakness that we saw in Nvidia last week.
No, no doubt. No doubt.
Yeah, but you mentioned something important too, which is I think you mentioned it, but we're seeing some capital rotate inside the AI trade, right? Google
Mhm.
is seeing a lot of love right now, but we are starting to see some rotation into other sectors at this point, right?
Mhm.
We're starting to see the breadth start to, I don't want to say getting better, but it's getting less bad. And we're starting to see some sectors, I think like biotech and pharma are two of them that are, starting to actually see some love where they haven't seen the love for a
Right.
while, right? And how notable is that to you? Because that seems to be healthy.
No, it is. And we wrote about this, and I think you and I even discussed this. This was probably 2, 3 months ago. Is that, healthcare was extremely beaten up. And we said that when this market rotates a bit, look for a rotation into healthcare, financials, and defensives as an offset for that correction in technology, because
Mhm.
technology was extremely overbought going into really October. And so we talked about this whole idea of the sector rotation. We had bought Eli Lilly, we had bought AbbVie and some other stocks. And the reason was for that risk off rotation that occurs. And I've showed you this stuff on Simplivisor before on the sector analysis
Yep.
that, from overbought to oversold. And that's what has occurred. And this is why, again, we go back to always talk about portfolio management is, and I get this, I got email questions from clients and we had phone calls into the office like, I don't understand why we own Eli Lilly. It's not doing anything, or Costco or Walmart, whatever it is. Right. I don't understand why it's not doing anything. We need more of the technology stocks because that's where, well, when you get these corrections, and by the way, this whole correction was like 4.25% peak to trough, right? I mean, can
Yeah.
we just please keep keep your shorts in your pants, right? Just keep things in perspective. But when they occur, we start getting all these phone calls like, oh my gosh, we got to get out of the market. And it's like, look, your portfolio is down like 0.5% from the peak because that rotation into those defensives was holding up the boat, right? And so those defensive positions, they don't necessarily always work, but when they do work, that's when you need them to work the most.
Yeah, yeah. I always say that good financial advisors, they always earn their stripes. Um, you know, during the time where they seem to be missing out on the party the most,
Right.
right? That's when everybody is really angry with you because you're not willing to just go a whole hog in whatever's popular at the moment, right? But it's that self-discipline to abide by the time proven tactics that saves your bacon when everybody gets surprised by a market reversal.
Right.
Yeah. Okay. So all right. Well, let's if we can, let's pull up the S&P. So just show us where we are. And in this, as you're doing that, the key question I just want you to address is so for a brief moment there, it looked like markets might be turning risk off. Um, but now it seems like risk on is certainly back on the table.
Mhm.
And not just in the AI sector. We're seeing, assets like Bitcoin, that got pretty walloped last week after a few prior weeks of weakness. I think it's up like 10 grand a coin
Mhm.
from its
Yep.
bottom that it hit last week. So
Yep.
is the market turning back risk on here?
Yeah, yeah, absolutely. Well, and you see this. So this is the S&P 500 versus the VIX. So this is your volatility index.
VIX and black,
And
obviously.
yeah, the black line is the VIX. And so yeah, you can just see that just, as we were coming down to test that 100-day moving average last week, volatility was spiking. That was the fear in the markets. And now we've completely reversed that. We're back down into, 15, 16 range of the VIX in just 3 days. So yeah, this is very much this risk on activity. Now, again, with all the stuff that we're talking about, keep with a grain of salt that there is nobody trading this week. All the big traders are gone. They're at the Hamptons, laying
Yeah.
out by the beach, whatever they're doing. This is all inmates running the asylum right now. So,
So
you
this could
know,
change a lot on Monday, is what you're saying.
yeah, yeah. So yeah, anything can happen next week. Now, speaking of next week, though, we do begin the last trading month of the year. Now, there's some important stuff that's going to happen. In the first 2 weeks, I would expect a little bit of a sell-off in the markets, and not it doesn't have to happen, but a pullback to the 20-day moving average, something like that, would not be surprising because in the first 2 weeks of the month, and again, we'll get a lot of headlines is like, see the AI trades over whatever it is. It's mutual funds distributing all their capital gains and interest and dividends for the year. They have to distribute all that at the end of the year. That tends to occur right in the first 2 weeks of December. So you typically get a bit of pullback in the markets in the first 2 weeks of December. And if you own mutual funds, you're going to see your mutual fund drop in value for a day. And you're gonna wake up one morning, look at your account, and your mutual funds are all gonna be down a dollar or two. And you're like, what happened? The market's up today and all my mutual funds are down. Because that's the distribution. In a couple of days, you're either going to get, if you dividend reinvest, you're going to get shares back, or if you don't dividend reinvest, which I encourage you to do, you'll get cash back.
Yeah.
And then
It's
you can
funny, it just
reinvest that
happened to me
cash
this
somewhere else.
morning. I looked at my portfolio and saw one of my holdings, wasn't a mutual fund, but it was Barrick, was down like six something percent. I was like, what's
Mhm.
going on with that? It's a big company. It's a big, and then it was
Yeah,
the dividend payout.
exactly. So that's going to happen in a couple of days. It'll all balance itself out. So it'll be fine. So just don't freak out about it, but also just be aware this is going to happen in the first couple of weeks of December. So you normally get a little bit of a pullback, and then that sets you up for the year-end rally where all the mutual funds, the hedge funds, the pension managers, everybody needs to make sure they have all the right stocks on their books for year-end reporting. Because when that report goes out, they need to make sure that they own the Google, the Apple, the Nvidia, whatever it is. They need to make sure that it's on their books. They may buy it December 29th, but they can say, oh, yeah, we don't. When you look at our holdings, yeah, we own all these companies. We own all the favorites. So, that's going to happen the last couple of weeks of the month. And that typically is why you get the Santa Claus rally into the second trading day of January. So
Okay.
that's just kind of the look ahead.
Yeah. And so in a nutshell, it sounds like you were thinking that that is the default outcome from your expectation here. That,
Well, that's the statistical norm.
yeah,
Does that mean it has to happen that way? Absolutely not. Are there
absolutely not.
years
But
that are there
go ahead.
years that that didn't happen that way? Absolutely.
Yeah.
But statistically speaking, about 70% of the time, that's the way it works out.
Got it. Meaning with your positioning there at RAA, you are planning on that more likely than not happening. It's you're not like battening down the hatches because you're expecting something different.
Correct. Well, that's why we did some buying very on Monday. We did some buying in the markets on Monday morning, and we trimmed Google and we did some buying across the board, rebalanced our dividend equity growth model, to take advantage of some of these cheaper prices. Because again, the default expectation is that based on averages, historical norms, et cetera, that markets are likely going to move higher through Thanksgiving and into the end of the year. So we were just positioning ahead of that.
Okay, doke. Um, all right. So, uh, anything else to say about the S&P here?
Yeah, so this is a couple of things. One, this is also kind of bullish for the markets. So this is the market. We've gotten back above the 50, and we had violated the 50 and the 20-day moving average on this correction, came down, touched the 100-day moving average, which is right where the bottom of this correction was. And now I've rallied back, regained the 50 and 20-day. That's bullish. We've turned money flow back positive. That's
Mhm.
bullish because money's coming back into the markets. We've triggered a momentum buy signal from below zero, which is also good. That now gives the market some room to run here over the next month, and relative strength is improving after getting decently oversold. So there's a lot of bullish tailwind for the next month behind the markets. Now, again, month, not next year, right? For the next month is what we're talking about. There's just a decent setup now because of this correction. We've had that 4 or 5% correction we just went through provides a very decent backdrop now for a rally for the next month. Now, again, once we get to 2026, I'm probably going to write the Curb Your Enthusiasm article again for next year because I think we're going to see more, like we saw this year. I think we're going to see more volatility again next year.
Okay. Two things. One, the negative divergence that we saw over the
Mhm.
past month or so, is that now over? Because it does seem like all these trends are now moving in the same direction.
Right. So this blue line at the bottom you'll see is that was the negative divergence in relative strength. So the market was rising as relative strength was declining. And that was why we were being a little bit more cautious in portfolios because that always precedes a correction of some sort, sometimes bigger, sometimes smaller, but always precedes a correction. So now that we've gotten that break in relative strength, got it oversold, now we can come back up. Now, what would be ideal is if we can get relative strength back above 70 and break that negative divergence. That's, because again, that's, that negative divergence line is going to run to about 65-ish right now. So if we get above that kind of trend line and get RSI back into positive territory, that would be even more supportive for the markets.
Okay. All right. And just because you brought it up, in the words of the great Yogi Berra, predictions are hard, especially about the future.
Exactly.
You wrote Curb Your Enthusiasm at the beginning of 2025,
Right.
and you warned of that it was going to likely be a more volatile year than we had had, and you were
Mhm.
correct on that. So
Yep.
great. But I think you were sort of setting an expectation that like, hey, we've had two blockbuster year in the markets. We're probably not going to get a third. If we end up rising into the end of the year here, I think we're going to be notably ahead of what your
Yep.
price target that you guys set at the beginning of the year. So my question for you is, there's no criticism here because it's so,
Yeah. Yeah.
predictions are hard.
Right.
How surprised are you at how this year is ending versus what you were thinking when you wrote that piece at the beginning?
So when I wrote that piece, I said expect 8 to 10% for the year, not another 20. We're going to be close to 20. If this market rally, so we're 16% right now for the year. We'll be close to 20% again if this market rallies into the year. We'll be 18%ish, like close enough for jazz, right? Um, that is surprising. I mean, triple back to back 20% gain years are not uncommon, are not, I shouldn't say they're not normal, but they're also they happen. We've seen these before. And the more years that we stack up of these outsized gains, the bigger potential that you have for a larger correction at some point in the future. So again, it's just with anything, we're stretching weekly trends and monthly trends to very large extremes. And I think that's something that, we need to at least be cognizant of. Here's a weekly chart of the S&P 500 as an example. So this is the Spider ETF. So this is SPY, a little bit different than the SPX, but it's close enough. Momentum wise, we're very elevated, trying to trigger a little bit of a sell signal here. Last time we had that sell signal trigger was going into basically April of this year. So again, now again, markets can remain overbought for a very long period of time, as we saw kind of all in 2024. Markets can remain very elevated, very overbought for a while. That's the problem with weekly indicators is that, for instance, a lot of people go, "Oh, you're triggering a sell signal. I need to get out of the markets." You got to be really careful with that because you had a whole year where markets were flipping back and forth at very high levels, and markets you had corrections, right? 3-5% corrections, but the market trended higher. So this is not a buy sell signal. It's a bit of a warning signal that we're going to have a bout of higher volatility. So again, I still expect as we get into 2026, earnings estimates are still way too elevated relative to what I think will actually come to fruition. Analysts are very optimistic about earnings growth next year, and particularly they are very optimistic about earnings growth for the small cap, mid cap space. They're
Yeah.
expecting 50% earnings growth next year.
Ridiculously optimistic. Yeah.
Yeah. With an economy that's potentially slowing down next year. So, if inflation continues to fall and the economy slows down, that's not great for profits because again, you need inflation for profits. That's, the inflation run we had was a big boost for profits, but that's kind of been backtracking a bit here. So again, I'm not going to specifically rewrite the Curb Your Enthusiasm article. I may do a spin-off of it, but it'll be the same idea, which is, hey, I would expect another year. If I'm positioning for this year, I wouldn't go into it blindly. And that was all. And really, the Curb Your Enthusiasm article was really just that. It was don't go into this year blindly and just be long risk because we're going to have some volatility this year because of these very overbought conditions. And it took till April, but it showed up, right?
Mhm.
And I think that's going to be the case this year. We're very extended. We're very overbought on both weekly and monthly bases. That increases the risk for a pickup in volatility and potentially lower returns. And valuations are elevated. We all know that, but valuations are a terrible timing indicator. But it does suggest that you'll have lower returns at some point in the future.
Okay. So let me ask you this, and I'm not trying to be I'm not trying to be intentionally pessimistic here, but um, over the long run, markets mean revert, right?
Sure.
And we've talked about this a lot, right?
Yep.
It is rare to have three blockbuster back-to-back-to-back years in the markets. So how concerned does that make you about 2026? just sort of from a math standpoint?
Well, from again, mean reversions take a catalyst of some sort,
Sure.
right? And so we need some type of catalyst to show up in the market. And that could be a credit event,
Right.
could
As
be
you say, these catalysts are always the bullet you don't see coming.
yeah,
They're
exactly. It could be geopolitical, could be anything. But
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 short, we don't
importantly,
know. We don't know what it's going to be. We don't know when it's going to happen. Yeah.
right. But what it does have to have is it has to have the ingredients that makes markets say, oh my gosh, all those forward earnings estimates that we thought we were going to get are no longer valid. It's going to be something much smaller because of this event, whatever it is. That's got to be the thing. That's why generally when we have these geopolitical events that occur, and it's like, oh, this, impact with, Ukraine or this impact with the Middle East, whatever it is, pick an event. A lot of times those may matter to the markets for just a moment or two. Like a day or two is like, oh my gosh, we're so concerned about this. And then markets go, yeah, but that's got nothing to do with earnings. We're back off to
Right.
chasing
Yep.
stocks. So the thing that creates that larger mean reversion is something that changes that forward outlook dynamic for earnings growth. And I don't know what, and again, the problem is you never know what that's going to be until it actually occurs.
Right.
But to your point, so having said that, let
Yeah.
me share a chart with you.
Yeah.
So this is a monthly
As you're
chart.
pulling it up, let me just give an
Yeah, go
analogy. The
ahead.
way I'm kind of looking at it, which might be wrong, is it's the Jenga tower, right?
Hmm.
It's you don't know which block is going to tip over the tower,
Hmm.
but you know the longer the game is going on and people are pulling from lower and low, at some point, you know it's going to come, right? And so it doesn't
Right.
mean it's going to come with the next block. It might not come with the next 10 blocks, but you're like, the longer we go into this game, the more worried I get that this thing's going to topple.
No, I agree. And that's my worry right now. So this is a monthly chart of the S&P 500. Now this goes back to 2005, 2006. This is a terrible chart to time markets with.
Yeah.
Absolutely terrible. Do not look at this chart and go, "Oh my gosh, I need to get out of the markets right now because it's all going to about to come peeling apart." Don't do that because you're going to be frustrated if you do that. But what this is, this shows a trend channel that we've been in since 2009. So this big drop off back over here, this is the 2008 financial crisis. Doesn't even really show up anymore, but there it is. That was a 50% correction. Since then, we've been in a very defined bullish trend. Whenever we get to the top of this bullish trend and get very overbought on a relative strength basis, we have a correction back to the bottom line of that trend, which also happens to be the running four-year moving average, which if I move this line, you can see this orange dashed line. That is the 4-year moving average for that market. So again, that's been kind of the running trend. Right now, we are back up to the top of this trend channel, very overbought on a monthly basis. But again, as we've seen before, this was the peak right before the April correction. We were overbought, had that correction, came back down to the 1-year moving average, bounced off that, then rallied back up. But here's a good example of what I mean by staying overbought. We kind of first triggered this overbought condition in 2021, and you stayed overbought, and the market continued rallying and actually moved above the trend channel
Yeah.
for about a year before it finally corrected. And then you had Russia, Ukraine, and the markets corrected back to the 4-year moving average. So my point is, and again, this is, and to answer your question, is that this is why going into next year, I'm a bit more concerned about a pickup in volatility, potentially lower returns, because you just have a very extended and overbought market. Everybody's in the pool. If somebody gets out of the pool, you're going to potentially get a stampede of people getting out of the pool. All they got to do is get out and yell shark, and everybody comes out, right? So that's the risk. I was doing an interview recently with Thomas Thornton from from Hedge Fund Telemetry. Sorry, Thomas, I didn't mean to give the wrong name. But he's with Hedge Fund Telemetry, and I was having this conversation with him. And we're using the theater analogy, which is, everybody's in the theater watching the movie. You may want to move closer to the exit because if something starts to happen, those exits out of the markets get very narrow. And Thomas said, well, it's also we're in a movie theater with very obese people because everybody's now leveraged. So now that exit gets even smaller because now all these obese people are trying to get out of these doors that are cramming the door space. And it's not politically correct, but it's a good analogy because
I think it's
now
a fair
we've got
analogy. Yeah.
yeah, because now we've got everybody not only long stocks, we've got over we've got roughly about 1.2 trillion in margin debt. That's not even to mention the amount of money in levered options, not to mention the amount of money in levered ETFs, which they're trying to bring to markets now, 5x ETFs. So we just have leverage. And then, of course, if I have a leveraged ETF that I bought on margin, I'm even leveraging that up even more. So we have so much leverage in the markets that at some point, if something triggers a sell off, you're going to get a decent correction and a pullback to the 4-year moving average is not uncommon. For the last 15 years, we've tested that 4-year moving average numerous times. So a retest, if you were going to do it today, said Lance, where's the 4-year moving average? That's at 49.90 right now.
Wow. That's
You're at
pretty painful. And I
69,
know what you're going to say. I know
you're
what
at
you're going to say next, which
6,900.
is, yeah. And I know what you're going to say is even if we hit that, that's a 2,000 drop in the S&P, right?
Yeah. Oh, you're still in a bull
We'd
market.
still be in the bullish uptrend.
Yeah. Yeah. It'd just be a correction. It wouldn't be a bear market at all.
Right. Meaning if we did have a bear market, not that you're saying we would, but
Yeah.
the pain would be severe because we know it's below 2,000 points from here.
Yeah, exactly.
Yeah. Okay. So
So again, but
you've
again, let
answered
me
my
just
question, which is,
wait, let me
yeah,
just reiterate one thing.
sure.
If you're listening to this video right now, do not go sell your portfolio based on
Mhm.
that piece of analysis. It is a terrible, terrible timing analysis. It's something to pay attention to from a risk management perspective, though.
Got it. And this is why we have you on every week
Yeah.
and letting us know where the action is heading. And to your point, Lance, which you've said many times, is, corrections, especially big ones, generally, not always, but they generally tend to be events. So, bull markets tend to be more processes. They take many, many years in many cases. We've been pretty much in a uptrend for the past 15 years, as your chart just showed. But the point being is when you get into this elevated territory, it's still a bad timing indicator because, as you said, it can last for a year or more, right? And so you and I have seen lots of people who consume a lot of videos like this and say, okay, it's overstretched. Therefore, I'm going to go two things. I'm going to take an extreme position by either shorting this market,
Mhm.
right? And then you just get zorched as your shorts go to zero as this thing remains elevated for way longer than you think.
Yep.
Or to the point you bring up a lot, people say, well, I'm just getting out of this thing because I'm too uncomfortable. And then you sit in cash and then the market just moves on you. And then you're stuck in that, oh gosh, the market caught fire again. I'm all here in cash. Now prices are even higher. Am I going to be the idiot who buys in right before this correction? You just sit
Yep.
there, basically paralyzed and indecision as the market just keeps on going higher.
That's right. Well, and that's what happens. This is why most DIY investors, not all, but most DIY investors underperform markets over time. They buy high, they sell low, they do all the common things. They get out of markets too soon, they get into markets too late, don't get into markets at all. And this is why it's important to if you have to admit to yourself, are you good at managing your money? If you're good at managing your own money, playing with markets, avoiding large drawdowns, those type of things, fantastic. Do it yourself. And Simple Visor is a great set of tools to help you manage your own money. But for most people, they don't have the time, the discipline, or the patience to manage their money well, and they don't have the tool set to work with. And we talked about simple things. If you can't sit down and write an investment policy statement, you need to go find somebody to manage your money. You should understand the very basics of an investment policy statement if you're going to manage your own portfolio.
Yeah, you're singing from my song sheet now too,
Yeah.
which is I always tell people that the very first and most important decision you need to make as an investor is what type of investor am I?
Yeah.
Right? Do I have the skills, the constitution, everything to be a good DIY investor? And hopefully the self-honesty too, right? Because you got to really ask yourself, if I'm doing it on my own, am I being successful? Am I doing better than I
Right.
would otherwise, right? And there's a lot of people who I think it takes them a while before their ego lets them admit, maybe even though I'm really smart in this area, maybe I'm not so smart in this one. Uh,
One of the funniest things that happens in our office is that we have couples come in all the time. So the husband and wife will come in and she's sitting there and he's there and he's talking about his portfolio and all, everything he's got going on in his portfolio. And then inevitably he'll get up and go to the bathroom or something. And the wife says, he's terrible. He's terrible.
Man, I could take this. You're putting your finger on something that's. I'll just mention really briefly. So I think I told you when I went to the New Orleans Investment Conference, my wife actually came with me. She's now starting to come on these work trips with me now that we're
Mhm.
empty nesters, and because she was coming, the guys at New Orleans, if you're coming there as a speaker, they give you the option to do a workshop, and I normally don't do one because I don't really have a product like that to
Right.
sell. But I said, my wife's coming with me, and she's a therapist, and she gets lots of questions about couples about related to money, as all therapists do, just as a lot of financial advisors like you get questions from couples. You get to be sort of a couples therapist part-time in your job as well, right? And I said, we could do like an interactive workshop if folks are interested on basically how to talk about money without blowing up your relationship. And the folks at the conference were like, well, that's kind of, we never thought about doing something like that. I don't know. And they're like, let's just run up the flagpole and see. And we ended up having a surprising number of people that came to the workshop, and
Mhm.
we're just sort of like, wow, I can't believe we can talk about this. Like, it was actually, I thought, from my perspective and from the feedback we got, a really constructive experience. So where I'm going with this is, um, I am thinking about maybe how to provide a little bit of that virtually. So folks watching, if that's something that might be helpful to you in your relationship, stay tuned. I'll have a little bit more to say about that, but very common things, which came, certainly came up in that workshop, are like, there's the person who's shouldering the responsibility of managing the family's wealth, right? Either they're the DIY investor or they're the one working with the advisor. And a lot of times their spouse is not interested in participating in that. And will sometimes say, like, oh, don't worry, I trust you, it'll be fine. But they don't really realize that puts a lot of pressure and weight on the person who's managing the family's
Oh
finances.
yeah,
And
absolutely.
they feel that pressure, they feel that weight, they feel that stress, and they feel isolated in it because they're like, oh my gosh, I'm alone in this, right? On the other hand, you'll oftentimes have one spouse feeling controlled by the other because the other one is holding too tightly to the reins of managing all the family's money, or whatever. You just have lots of differences of opinion around money, and there's a lot of emotion wrapped up in
Yep.
that. I need to tell you that, Lance, because you see that all the time. But
Yep.
if somebody's watching this and to say, yeah, I'm hearing my own relationship in this conversation. Like I said, stay tuned. We may actually have some online
Good.
interactive workshops that might be useful to you. So stay tuned.
Absolutely.
All righty. So we're getting near the hour, so I do want to start wrapping up. At the risk of taking a perfectly nice conversation and ruining it, um, can we just for a second, Lance, talk about the precious metals?
Sure.
Because I believe today they're in breakout. Certainly, silver is in breakout. Um, and at times, I know you get painted with the brush as Lance hates gold and hates precious metals. You don't.
I
You hold it
don't.
in your permanent portfolio and all that stuff. You
Yeah.
just like to highlight when you think it's overstretched.
Mhm.
I want to basically I just want to check in with you to say, hey, is this an overstretched moment, or is this like an interesting momentum breakout that might have some continued upside here?
No, again, as always with any asset, right? And this is what we've talked about, so many times before is again, when you're managing your money, is to pay attention to what kind of goes on, behind the scenes with these assets from a technical basis, because the technical backdrop will keep you out of trouble more often than not. And I'm trying to bring up a chart here real quick for you. So no, guess about probably 3 or 4 episodes on the show with you. I was telling us, hey, gold's going to be a really good short here at some point, and then we had this really nice correction. Gold prices came back down, basically started flirting with some of these longer term moving averages, which are good. You had a nice correction here. You reversed a big chunk of that big overbought condition. You flushed out a lot of traders, especially people that were kind of trading some on leverage. You kind of flushed a lot of that out. And so you've started kind of basing here. So when you look at relative strength, you're in a bullish mode as long as you're above 50. You get below 50, you've got some other kind of concerns to worry about. So we've come down, we've reversed a lot of that relative strength overbought. We had a big deviation from the long term, the 200-day moving average. That was one of the highest deviations we'd seen historically. Corrected a big chunk of that. Now we're still deviated from this long term mean, so there's still downside risk here. Don't be mistaken. But again, you've worked off enough of that short-term overbought condition to allow traders to come back in and start trying to speculate on the bottom. And so, there's a reasonable potential for gold to rally from here. And so again, if you're wanting to buy gold, you've got a much better entry point now than you did a few weeks ago to buy gold. But I would be a little bit cautious from the standpoint that you're still deviated from long-term means, and that if something happens, there's still the potential that you could get a bigger correction in gold prices. Again, it could be a strong rally in the dollar, which affects dollar denominated assets. So don't go into this expecting that absolutely there's no downside risk, because there's still downside risk here. But you've had enough of a short-term correction to now allow people, particularly funds and investors that want to own gold for this year. You've got the year-end rally in commodities, just like you have a year-end rally in stocks. So there's the potential here for a decent rally in both gold stocks as well as oil stocks into the end of the year.
Yeah, and actually on that point, you always talk about, part of the year-end rally is the folks that weren't in the popular trades
Mhm.
buying them at the end of the year just to show the world, okay, I'm finally in this trade. Um, Gold's had a phenomenal year, as have the miners and silver. So is your default expectation that they're going to see some additional buying in the last weeks
Yeah.
of the year?
If we can get kind of the bullish footing back under the market, that wouldn't surprise me at all.
Okay. And just to connect the dot here, folks, if you did not see the interview with Michael Oliver earlier in the week, Lance, he's a technical analyst and,
Yeah.
and went through a number of charts. Spent a lot of time actually on gold, silver, and the miners. He is extremely bullish technically on them because some of these key indicators that he looks at, these ratios. Uh, Gold had entered breakout. Silver and the miners were like just poised at the beginning of this week, and he said if they can close the month above the breakout threshold, then it should be game on. Given the price action in silver and the miners since Michael was on here, I'm pretty confident that we are closing the month above those breakout levels. So if Michael's logic proves to be correct, then those could have a really good, strong performance here to the end of the
Yeah.
year. Again,
Yeah.
time will tell. All right. Well, look, as we wrap up here, Lance, trades. You mentioned you have made some over the past couple
Yeah.
of days. So what have you guys?
I've got two things that I want to go through with you. We'll do trades first.
Okay.
But I had more of a concerning email earlier this week that I think that we need to actually kind of just spend just a quick moment talking about.
Sure.
But trade wise this week, we reduced our position in Google because it was extremely overweight. We added to our position in Meta. We reduced our position in the healthcare stocks. Remember, we talked about this big rally in healthcare. So we reduced Eli Lilly and AbbVie back to their target weights. Again, those are big positions in our portfolio. So those are, all these positions are some of the largest holdings in our portfolio. So when we make adjustments, they have an impact on the portfolio. We also added to BlackRock and JP Morgan in our financials because with the Fed cutting rates, that should benefit the financials as well. So we did add to those positions. In our dividend equity growth model, we rebalanced our top six holdings. So that dividend growth model is a little bit different than your average, kind of aristocrat model. It owns the six largest stocks in the S&P 500 to replicate the growth of the S&P 500, because that's where the majority, if the market's going up, that's where the majority of the
Yep.
growth is going to come from in the index. So it owns 30% of that portfolio is those six stocks. So those are
So
each
it
weighted
owns the Mag
5% each.
6, basically.
Yeah, I have the Mag 6. And then the rest of the portfolio is all dividend yielding stocks. And so we brought Apple, Meta, Amazon, Nvidia, Google, Microsoft back up to their 5% target weightings. I had to sell down Google to do that. and then we rebalanced all the other positions of the portfolio back to their normal 3.5% weighting. So we just did a kind of an early year-end rebalance to just kind of get the portfolio ready on this dip to participate in the year-end rally. And so rather than wait till the end of the year to do it, we kind of opportunistically did it now.
Got it. All right. All right. So yeah, you trimmed or rebalanced early.
Yeah.
Okay. All right. Well, look, let's get on to your other topic there, and just wanted to note, I'm trying to get you out early here. So if we go
I
long
know. Well, so no,
on your time, no, it's important. I'm saying let's do it. Yeah.
yeah, no, I got this email earlier this week, and I've talked about this before to a large degree, which is be careful with what you do with your money. And there's all these investment programs out there. It's like, oh, if you'll invest, with me, we're going to make you all these returns, this type of thing. Well, in this particular gentleman, he invested in a crypto fund because this was when crypto was going up, and you could buy all sorts of, non-traded crypto, et cetera, and you could make all this money. It sounds great. So he invested a large sum of money with this quote unquote cryptos futures trading company.
Sorry to
And
be clear, we is him, we is not RIA.
oh yeah, yeah, no, not we. Yeah, we
Yeah.
would never do that. No, he invested in this, and the key, your key warning sign is when anybody uses WhatsApp, it's 99% chance it's a scam. So there is no US RIA investment manager, et cetera, that's going to say, hey, let's talk over WhatsApp. And again, Adam, you have a lot of imposters. I have a ton of imposters
Of
on
course.
X and other places, and they're like, hey, contact me on WhatsApp and I'll give you my latest trades. That's not me. We don't, there's a whole security issue around WhatsApp. So if there's
Sorry,
any,
I have that telegram to
add
your
Telegram
phone because I hear that. Yeah,
to
I've
your
never
board.
used it, but I see the scammers use it a lot. Yeah.
Yeah, absolutely. It's almost that is your biggest clue when they say contact me about WhatsApp, Telegram, etc. It's probably a scam. Don't do it. And do some research. Anybody that is a registered investment advisor, a licensed broker, whatever it is, you can go to the SEC or FINRA and look them up and tell if they're, and I can go and look up Adam because he's registered um, with the
SEC.
SEC. Yeah. And I can go through broker check and I can see Adam, right? He's licensed, right? So that's the important thing. So make sure the whole point is before you go send your life savings somewhere, do a little bit of work. Just don't chase promises of huge returns because that's where greed gets you into trouble.
Okay, so you get three really important things wrapped up in there, which is if any financial specialist is reaching out to you on social media, forget about WhatsApp or Telegram or anything.
Yeah.
That's a 99% chance that it's a fraudster just trying to get your money, right?
Yeah.
Really good financial advisors have people seek them out. They're not out there trying to ping random people on the internet. Secondly, yeah, just do your due diligence. You should do that about any investment, but certainly any partner you work with, like working with a financial advisor. So go search, these public databases that you're talking
Yeah.
about. It's a really easy way as a first filter just to get a sense for if someone's legit or not, right? So
Yeah.
start there. And then third, and I feel terrible for this person. I don't know exactly how much of a percentage of their wealth they lost, but you know, be risk appropriate in your investment decision making, right? I mean, crypto, especially any kind of crypto, but especially non-Bitcoin crypto, uh, I mean, that's way on the far end of the scale in terms of risk. So I'm not saying don't dabble there, but I'm saying, especially if you're not super already knowledgeable about this space, don't put anything more than a few percentage of your portfolio in there, or else you're just playing with fire.
Well, there's a simple rule that we use and that I use personally. I've used this my whole life. Is I call it Vegas money. I never invest more into an asset of some sort than I would be willing to lose in Vegas.
Mhm.
So, and because again, if you always have to assume the worst, we all buy stuff expecting it to go to the moon, which is fantastic. But what if it doesn't? What if it collapses in price? And it happens. It happens in gold. It happens in stocks. It happens in everything, right? And there's a potential for big price declinations to occur in every asset class over time. It's just a function of timing till it occurs. So just make sure to Adam's point, you're just managing that risk appropriately.
All right. Okay. Well, all right. I'm glad you brought that up, but
Yep.
everybody else just proceed with
Just
caution, be smart, and when in doubt, do due diligence to find somebody smart to talk to and ask questions. Hey, does this look legit to you? Right. I'm going to make this offer for you, Lance, but if someone's getting contacted by somebody like that and they just don't know, they can call your firm and you guys will help
sure.
them assess, right?
Absolutely. Yeah. Yeah. If somebody's soliciting you for something, say, hey, well, I had a guy email me the other day and said, I'm talking to this RIA in Florida and I can't find the information about them. So I went and did a broker check on them. They're not registered. So, you can do it yourself, but yeah, absolutely. If you've got a question, and look, another thing is if you can't find them on broker check, tell them to send you a copy of what's called their ADV. It's Apple David Victor. Their ADV is what they have to file with the registrations. Adam has one, I have one. Say, send me your ADV. It's all the details of the firm, how it's registered, what it does, et cetera, so forth and so on. Just ask for a copy of the ADV. If they can't send it to you, don't invest with them.
Don't invest with them. Yeah.
Yep.
But again, folks, and this is, I have these advisors like Lance on this program for a whole bunch of reasons. But they're largely to be a resource for you guys, right? I mean, when it's Lance here shows you how a professional financial advisor that I think is above my definition of a good quality threshold, how they think, how they react. Lance is very generous in sharing with us every week. But obviously, if you want some an advisor to work with, I always say then either work with these guys or somebody who's even better than them, right? But they're also just here to be a resource. So like, hey, before I make a potentially consequential financial decision, if I'm not really confident in it, let me bounce it off these guys first. So anyways, Lance, thank you for you and your team for all the
Yep.
advice and generous help that you offer to people.
Yep.
All right, well, look, in wrapping up here, so, all right, I kind of had a rant and all that stuff. We're going to put it aside. I'll just mention that really quickly. You can go online, certainly on YouTube, and there are explanations of this. But Thanksgiving has a really interesting origin story, and part of it, Lance, is when the Pilgrims came here on the Mayflower, they had a disastrous first winter here, right? Like
Mhm.
half of them died, right? And there's a great story about Thanksgiving, giving thanks for making it through all that, having the local Indian tribes actually, they were very instrumental in showing the pilgrims how to plant corn and prepare for the next winter and whatnot. But and that was super helpful and I'm sure essential to the pilgrims surviving over time. But another thing that was essential was when they landed, the compact that was written on the Mayflower on the journey over was very much like a socialist contract where nobody owned anything individually. You all had an equal number of shares in the compact, if you will. So everybody sort of mutually owned any buildings that were built or the fields and whatnot. And so what they realized was that the most industrious people were not working to their potential to build what they could build or plant what they could plant because they knew they weren't going to get directly rewarded for it.
Yeah. It's
It's
all
what we learned from
socialism.
socialism, over the many centuries and the many times it's been failed. And so William Bradford, the leader of the plantation there, Plymouth Plantation, he basically implemented property rights and he started giving people direct ownership of their homes and their fields and whatnot. And then once he did, so much more energy was expended by the individuals on average that they started to actually dig out of the hole of need and begin to get to plenty. So it actually is this really interesting story about free markets and capitalism.
Yeah.
And folks, if
Amazing.
you want to hear more about it, like I said, just go on YouTube and type in, I don't know, uh, pilgrims and free market or whatever, and you'll get a number of explanations of
Yeah.
this.
No, it's a true story. Real quick before we wrap up, I just wanted to share this very quickly. It's kind of a shameless plug, but Adam's coming in January. So January 17th is our next live summit. We've got Daniel Kang, who's the Chief Strategy Officer for DeFi Development Corp, coming to talk about digital assets, crypto, those type of things. Brian Dunlap with BlackRock to talk about artificial intelligence, what the future of that's going to look like. Some loser named Lance Roberts talk about the markets. Michael Leibowitz will be there. Ed Slott, who is America's financial planner, talking all about Social Security, Medicare, Medicaid, what you need to be doing to financially plan better. And of course, Adam will be there as well to talk and spend time. We'll have a big Q&A section this year, so it's gonna be a lot of fun. But tickets went on sale this past week. We've already sold about a quarter of them. And the price will go up as we get closer to. So if you want to come and visit, we have a block of hotel rooms set aside at a discounted rate. And we're going to have a mixer the night before. If you want to come to that as well, that event will be there for you. Visit with everybody before the conference. So again, that's coming up. It's January the 17th, but tickets are online. If you go to realinvestmentadvice.com, we've got a link at the top so you can get your tickets now.
Okay, that's what I was going to ask. Okay, so the URL is ria.com, or sorry, realinvestmentadvice.com, and you'll have a banner or something on the top
Yeah,
of this.
there's a banner at the top and a link.
Okay. Well, I have really enjoyed the previous ones, and they just seem to get better every year. So I'm very much looking forward to this one, Lance.
Yeah, it'll be fun. And your wife's going to come, so my wife's excited.
All right, great.
Yeah.
It's gonna be a good time, and I like that you expanded it. Right, there's sort of a mixer the night before you were saying.
Yep. Yeah, we have there's limited tickets for that. We've only got about room for about 30 to 40 people for that mixer. So again, those tickets will probably sell out pretty quickly. So again, if you're interested, you need to kind of, get your tickets now.
Okay, all right. So, folks, if you want to hang out with Lance and I in person, I think that would be super fun. Hope to see you there. So go to
Yeah. Make sure you bring your wallet because I think my wife is going to take your wife shopping. So
Nah, I definitely will not bring. But I might bring my pickleball paddle if there's anybody that
there,
wants to.
there you go.
All right. So just in wrapping up here, because it is Thanksgiving, I want to give a couple quick things I'm thankful for, and then want to ask you if you want to share the same.
Mhm.
But so I was reflecting right before I got on with Lance. What am I feeling especially grateful for this Thanksgiving this year? One is what we have built and are continuing to build together here at Thoughtful Money. And when I say we, I don't mean me. I don't even just mean me and Lance and the other advisors here. I mean everybody, all you viewers. This is a platform that is kind of made for the people, by the people. Everything that I do is basically listening to the feedback that you all give me and tell me what you want to see more of on this channel. I have received a ton. I unfairly receive a number of positive comments of support from people on a regular basis, but certainly around Thanksgiving time, a lot of you were very kind just to say, hey, one of the things I'm really thankful for, Adam, is Thoughtful Money. It's played a big role in my life. It means so much to me to get that kind of feedback. And we are, just so you know, we are reaching people really at scale now with this platform. We have consistently, I think, pretty much almost every month this year, reached at least a minimum of 100. Sorry, at least a million of a minimum of a million views per month. Sometimes almost twice that, given the month. So we are reaching a lot of people at scale now with this platform, and that feels. It's just something I'm both pleasantly shocked by, but also just supremely grateful and appreciative of. And interestingly, the world is really starting to take notice. Just in the past 3 days, Lance, I've had one of a pretty decent article written about one of our interviews on this program on Newsweek. I just got an email the other day from the Daily Mail saying they want to do a piece on this. So the world is starting to take notice of what we're doing here. And again, it just feels personally such a privilege to be able to be involved in this. And again, folks, it is only made possible because of all of you watching this and telling me where you want this channel to go. The other thing I'm very thankful for is having all my girls together, my wife, my daughters. One of my daughters has been, like you, Lance, has been out of the country for much of the past 2 years. And she came back to the country earlier this year, but then she had this job that took her all over the US. So this is, I think, only the second time this year in 2025 where the four of us have been in the same location at the same time.
Nice.
And that feels very wonderful. And then last, at this, my Thanksgiving last night with family, it was really taking note of the multi-generational aspect of it. Fortunately, my wife's parents are still alive, but they're getting up there. But they and their friends, great to have that senior generation there. Of course, my generation has taken over the responsibility of all the operations and the hosting and the cooking and all that stuff. But then, I don't know, probably had about 12 grandkids there. our children who are our parents' grandchildren, and they're stepping into adulthood now. So that's really fun to see the next generation that's going to take over the torch from ours. And then in my wife's and my family's, we just last night had the first announcement of the first child from that
Nice.
cohort. Sorry, from our kids cohort. So this is going to be the first great grandchild of the family, and
Nice.
it's going to be a little while before my daughters get married and have kids, but they're getting to that age, and it's just making me reflect that I'm about to step into that next act of life, where I'll be the elder, hopefully at some points, the not too distant future, the grandpa or whatever. So it's
Yeah.
just, I'm very thankful for the arc of life and how it seems to be working well here. I'm just super privileged to be in it. So, anyways, that's my level of gratitude for this year. How about yours?
Well, no, pretty much I can just say ditto because I'm very thankful for your friendship and doing this with you. I'm very thankful for the opportunity I've had to work with you. It's
Thank you,
been a
Brett.
lot of fun and just being, just your friendship has been a real blessing. Um, and also too, very thankful for my family. Like you, my son came home from the UK, so in fact, he's getting ready to leave to go back in just a few minutes. So we're going to take him to the airport, but it's been great having him in town. All my kids were together. We had a big family Thanksgiving yesterday. And that's really where you kind of recognize that, I look at all my kids, they're all heading in the right direction. There's no problems. They're all have matured well. They're very responsible. And just in that, you just look at that and it's like, I'm so thankful just for that because I've
The absence
got
of serial killers. I didn't raise a criminal.
yeah, and I'm very thankful for that. I mean, there's no serious issues we have to deal with. They're all heading in the right directions. They're doing the right things. They're very sweet young kids. Yeah, very blessed for that, and I'm very happy. And then of course, just also too, at the end of the day, I'm very thankful for again just all the outreach that I've gotten from your channel for my wife and what we're going through with her cancer treatment. That's going very well. We're two-thirds of the way done. And we're very optimistic that things are going to turn out well. But the thoughts, the prayers, that's been a huge support for both of us because I share them all with her. And so all the outreach we've had from your viewers has just been, more than I could have asked for.
Well, that's great. And so everybody watching, thank you for all those
Yeah,
messages of support to Lance. As you can see here, they really do
they
they
mean
really
a lot.
make a big difference for them. Yeah.
Yeah.
And I'm very grateful for you've been sharing with me the progress of the treatment, and it seems to be going about as good as we could all hope
Mhm.
for. So that's
Yeah.
wonderful to hear.
Yeah. So far so good. So like I said, we're hopeful.
Okay. All right. Well, look, I'm going to let you go and take spend your last minutes with your son as you take him to the airport. I'm also going to go and try to get in a post Thanksgiving dinner workout today. I'm definitely feeling a lot heavy.
You and me both.
Of course, sitting
That's
back.
next on my list.
Yeah. Yeah. To that note, though, folks, I very publicly on this channel a few weeks ago went through the 5-day fast. I've had a lot of people pinging me about it, thinking, "Hey, I might be interested in doing something similar. Adam, can you tell me what program you used?" And then I've had a number of folks just since Thanksgiving reach out and say, "Hey, I ate a little bit too much. What was the name of that fast?" So if you're thinking about doing a fast, and maybe Lance, at some point, you and I we can do a rant about the real benefits of them.
Sure.
But if you're thinking about doing one, folks, the one that I used is called Prolon. It's very science backed. And if you want to learn more about it, but also they sent me a link that Thoughtful Money users can use to get 25% discount on the program. So anyways, if you want to look into that, just go to thoughtfulmoney.com/fast and it'll redirect you to the exact fasting protocol that I used. All right. Well, look, in wrapping up here, folks, please show your gratitude to our good friend Lance Roberts here by hitting that like button and clicking on the subscribe button below, as well as that little bell icon right next to it. And obviously, if you would like to get some help in terms of and looking at your portfolio and figuring out how to best position it for the coming new year, whether you've got questions that are related to any of the things that Lance and I talked about here, you can get guidance from Lance and his team there by filling out the very short form at thoughtfulmoney.com. Only takes you a couple of seconds to fill out the form, and the firm that you get matched with will reach out to you momentarily after you fill it out. With that said, Lance, it's always great, buddy. I very much appreciate you
Yep.
coming on day after Thanksgiving to do this while you got family in town. Look forward to seeing you here next week.
There you go. See you then.
And everybody else, thanks so much. for watching.